Hey guys, what's up? James Godin here. In this video, I want to do just a explanation of a few really critical things when it comes to building wealth in your crypto portfolio. And three things I'm going to cover is number one, the crypto investing basics, then crypto trading basics, and then my personal crypto style. So let's jump right in, okay? So as far as my crypto investing basics, all right. Really what I want to do is I want to buy the top cryptos, things like Bitcoin, Ethereum, whatever's really like in the top five, right? And I want to do that with fiat currency. And usually it's going to be Bitcoin or Ethereum because I can use that to buy other cryptos with later. So the next thing is you want to really do your homework, okay? You want to read the white paper for whatever coin or token that you're thinking of investing in, and you want to feel really good about it. You want to understand what it is. You want to see that there's a good team behind it. You want to feel like there's a really strong chance that what you're investing in could really increase in value over the long term. Okay, so you want to do your homework, you want to read the white paper. If a coin or a token does not have a white paper or doesn't look like they have a strong team behind it, then I would just avoid that completely. Okay, so again, also I repeat this a lot in a lot of my videos, but I want to really hammer this home because it's super important. You want to only invest what you can afford to lose. And I don't say that because I'm expecting to lose. I'm saying that because the reality is it's a very volatile market. Cryptocurrency market it has tons of ups and downs, and it can swing up like by 100% like that, and it can just dip really hard in the other direction just as fast. So you want to make sure that you're only putting money into a crypto or a overall portfolio that you feel comfortable working with. Okay, you wouldn't want to like go and risk really important things like your mortgage payment or something like that. Okay, you want to make sure that you're playing smart, okay, in this industry. And the next thing when it comes to investing in crypto is you want to go in with the mentality of holding long term. Okay, and ideally I would hold until a new all-time high for that particular currency is reached. Okay, and what I mean by that is there's all these bull runs that happen where there's these massive increases in value in certain crypto coins, but then there's also these bear drops where it just kind of goes like this. It does the opposite of the bull run. And we saw a real bear market over the last couple of weeks, actually like the first 2.5 weeks of January. We saw a lot of those cryptos drop by close to 40-50+%. Okay, so the thing is, a lot of people panic and they sell off during those times. But if you're in this for investment purposes, you want to hold long term, because if the market has shown us anything over the past several years, is that if we specifically look at Bitcoin itself, you'll see that at the beginning of the year and around the holiday season, it takes a massive hit, right? Because you got to realize this is a retail market, okay? Because these cryptocurrencies and these smart contracts on the Ethereum network, which are called ERC20 tokens, these things are digital assets, all right? They're classified as a product. They're considered property, okay? So because they're considered property, we're kind of like in this retail space. And because we're playing in a retail space, you got to look at what happens in the retail market around the holiday seasons. What do people do? They take their money out of their investments and they go and splurge on holiday gifts and paying back their credit cards after they splurged on holiday gifts for Christmas and stuff. They're pulling money out of their savings and investments in order to pay back stuff they borrowed or to cover themselves for what they spent during the holiday season. And some of them took out a lot of money prior to the holiday season in order to go and buy the things they wanted to buy for Christmas and things like that. But then the thing is come around this time, they get maybe halfway through January, they start getting into February, and we get like mid first quarter of the year, and people start to realize, oh wow, I need to start paying attention to my long-term investments. I need to start paying attention to my savings. I need to start paying attention to income coming in, as opposed to just spending all this money like they splurged during the holiday season. So it kind of like comes back to them, and they realize, and the panic kind of switches gears a bit. First, they were panicking to sell everything so they could have money to spend, and then when they have no money and they find themselves up to their eyeballs in debt and trying to recover from that, the panic switches into, oh God, how am I going to get more money coming in so I can recover from what just happened? And that's the thing, is it always does come back. They always manage somehow to recover, because people are very resourceful creatures. And you see that time and again in the retail space, and crypto being a part of that retail space. You want to pay attention to those trends, because year after year after year it dips, but it comes back usually midway through the first quarter or toward the beginning of the second quarter of the year. It does come back, and there's all kinds of ups and downs in between throughout the year. But if we look at the historical data and we just look at the retail industry as a whole, we can even look at that for decades, far beyond in the past where crypto even existed. So we can look way beyond the point of crypto data just into the retail data, and you'll get a really good indicator of what crypto is going to do since crypto's in the retail space. So without just kind of spinning my wheels on that over and over again, I wanted to hammer it home to you, though. I wanted to make it really clear of what we're dealing with here and why it's important to hold long term, because these prices that you saw dip down, like Bitcoin it went from 15,000 or 16,000 all the way down to 9,800 or 9,900 in a matter of a couple weeks. But then the thing is, like 3 days after that, the worst of that happened, it jumped back up to around 12,000, right? So it dropped by like 5,000-6,000 in a few weeks, but then in a couple of days it reversed and it jumped up by about 3,000, and we're kind of moving back into that upward trend. We're still going to see some ups and downs. It might drop down around the 9 or 10 mark again before we get out of January here, but I do expect it to go up long term. So if I'm talking about investing in crypto, I'm talking about long-term holding. And the last all-time high for Bitcoin was, I think it was like 19,800 or 19,900 or something, just under 20,000, okay? So personally, for my Bitcoin, I wouldn't even dream of selling it unless it went to like 25 or 30,000. And even then, I would want to watch it and look for signals, and also listen to what the experts and the analysts are saying, as far as this could potentially be a bearish sign that it's going to reverse and we're going to go into another downward trend. Now, you have to just kind of play it by ear, so to speak. You got to, watch it yourself, learn how to read these charts a little bit just so you understand what's going on, and then to the best of your ability, and then trust the experts that really do know what's going on to help you and guide you. But ultimately, at the end of the day, it's up to you, right? It's up to you to decide when you're going to buy, if you're going to buy, when you're going to sell, if you're going to sell. I can't tell you when to buy or when to sell, or what to buy or how much of it, or what to sell or how much of it, because I'm not your financial advisor. I'm not even a professional advisor at all. I just love crypto, and I'm trading to a small degree, and I'm investing mostly. And I'll show you how this kind of plays out, what I just said there. But first, let's go over some crypto trading basics. First of all, you trade from your fiat currency to crypto, like Bitcoin or Ethereum, and then you can move that crypto back into fiat currency by selling it off, and you have your fiat currency again. Now, some people they'll come in with fiat, they'll buy some crypto, they'll hold it till it goes to a certain point, then they'll sell and they'll take out their fiat money for a profit. Some people are good at doing that. The average person is not going to win trying to do that because the average person doesn't understand the trading signals. They don't know how to read Japanese candlestick charts. They don't know how to basically assess the market, right? They don't know all the signals and all of the terminology and all the technicalities of how it works. So the average person would just say, oh, well, it's low right now, so I'm going to buy it, and then it goes up and I'm going to sell it, and then they try to guess when it's going to go back down and try to sell it. But that's a really good way to lose a lot of money really, really fast if you don't know what you're doing. So I don't recommend doing that. So as far as to my extent of trading, I'll do this. Here's what I'll do. I will trade the fiat to crypto, and then I will keep it in crypto, and I'll trade crypto to crypto, meaning that I'll trade Bitcoin for Ethereum. I'll trade Ethereum for Bitcoin. I'll trade Bitcoin for Litecoin or Bitcoin Cash or something else, right? And the thing is, I'm not trading at a low point trying to get out at a high point like a day trader. I don't do that kind of trading. That's not what I do. What I do is the only kind of trading that I do is simply to exchange one crypto for another because I plan to hold all the crypto that I put into my portfolio. I plan to hold it long term, right, as an investment. So I'm not looking at this from like a day trader's perspective where they're reading the signals and like hour by hour or even minute by minute seeing if it's going to go up or if it's going to go down, and then making these buy orders and sell orders based on what they're seeing in the market. I don't do it that way because for me personally, I don't want to learn it. It's not that interesting to me. It's actually too stressful for me, to be honest with you. It's not fun for me. What's fun for me is to research the market, understand the value of what's in a company and the technology behind whatever these people on this team are doing with their particular crypto application. So whatever it is that they're doing, I like to understand the people, understand the team, understand their mission, their goal, their vision, understand the value behind what they're doing, and then make a decision based on that value, based on what they have available, what kind of team, what kind of power they have behind their idea. Ultimately, I want to look at that stuff. That stuff is what intrigues me and fascinates me, and I want to play around in that space. So I treat it more like an investor. Okay. But I still do trade one crypto for another because I might want to hold this crypto because I find a company that I really believe in with a team and a vision and a plan that I really, really believe in, and I think it's going to be really strong and it's going to be a very profitable investment. And I say, okay, I think that's a good move. That's a smart move. I'm going to move some of my Bitcoin over into this new coin. Or I'm going to move some of my Ethereum over into this new token or this new coin, right? And I'll do that. That's the extent of my trading. I'm not going to sit there and trade on the margins and go up and down and up and down. That stuff drives me insane, right? So, but essentially these are the types of things you do. Crypto to crypto, a coin to a token to a coin. Essentially a token is just... It's a cryptocurrency, basically a smart contract that has been created on the Ethereum network. So rather than having its own blockchain like Bitcoin or Ethereum, it's actually being built upon an existing blockchain, which is Ethereum, the Ethereum network, the Ethereum blockchain. And those are called ERC20 tokens. And typically what people will do is they'll use those tokens in an ICO, an initial coin offering, to raise money so that they can actually develop and release their own private, or not private, but their own personal blockchain with their own cryptocurrency, their own coin. And then the token would convert into the coin at the time of release. But ultimately, that's what I do as far as the trading and is concerned. But again, the same thing with investing. It's true with trading. Only trade what you can afford to lose, because it's risky to make certain investments. Yes, there's an inherent risk with any investment, really. But with cryptocurrency, it's very volatile. So investing and holding long term is a little bit less risky than it is to be trading like a day trader with cryptocurrency. That's way more risky, especially for the average person that doesn't know what they're doing, because like I said, 1 minute you're up 30%, the next minute you're down 60, right? And you might guess it's going to go up, and you place an order and it ends up going down. You might place a sell order and you sell, and you're like, okay, I'm going to sell here because I believe that it's going to go down, right? So I'm going to sell. I think it's going to drop, so this is probably the best it's going to get. And then it goes up by another 30%, and you're like, oh man, I missed out. But then sometimes what happens is you think it's going to keep going up, right? So you hurry up and buy, and you're like, oh no, I better buy before it goes too high. And then you buy it and it drops, and then you end up losing that way too, right? In the one way, you miss out on what could have been, and on the other way, you end up losing because the currency that you bought into ends up losing value. And that's really what happens with people that are trying to get into trading, is they try to guess if it's going to go up and they guess if it's going to go down. They don't understand how to read the markets. They don't understand crypto. They don't understand how to read the charts and how to do proper analysis themselves. And even the best analysts in the world and the best traders in the world, even those people are going to lose money too. You know, they don't win every single time. Okay, so if you're just an average person coming off the street seeing this video, you're like, ooh, I want to trade crypto. I'm going to tell you, you want to make sure that you go and learn everything there is to know about trading this stuff before you even put $10 into it, because you can lose money real fast. But here's the thing. This is what people usually do. They buy the dip, sell the moon. What does that mean? It means they buy low, they sell high. And they learned how to read those market trends and the graphs and the candlesticks and all this. They know the signals, and they're able to spot them very, very well. It's very clear to them. They understand it very, very well. And they can make a lot of money doing that. But they can also lose a lot of money if they're wrong, because they're not always right. I've seen people where they have a 6-figure portfolio or even a 7-figure portfolio, and they go to place a trade, and 1 minute they're up 20, 30,000 in their portfolio. The next minute they're down 40 or 50,000, right? Because they made a poor choice. And then, what are you going to do? But here's the thing. Here's how I apply my own personal style to this crypto investing and trading. Is, like I said, I just take the fiat and move it into crypto. Usually it's Bitcoin. Usually I'll just take some cash and either a credit card or a bank wire or a ACH transfer or whatever. I will take some of my money and I'll put it into Bitcoin, and then from there I'll take Bitcoin and I'll move it into other cryptos. And sometimes I'll take those cryptos and I'll move it into tokens, or tokens back into coins, depending on what it is that I want to hold. And again, I'm watching the market. So if I think long term that one of these companies is going to do really well, but then I'm watching the market, right? I'm reading the news. I'm keeping up on the progress of these companies that I'm investing in. I'm not just investing and then just praying to God and hoping that it works out. I'm watching these companies. I'm watching the teams. I'm reading the news, right? I'm keeping myself focused on what I have my money invested in. And if it seems like this was a really good long-term investment, and then a couple months down the road it's a better investment, then I confirm that I made a smart choice and I keep on holding, right? But the opposite could happen too. I could invest in a company and a few months down the road, it turns out that it was not as good, or maybe it was good to start with, but things fell apart. Maybe the team started to have problems. Maybe the team fell apart. Maybe the company went bankrupt. I don't know. There's all kinds of things that could happen. But if you see something like that happening and you're paying attention, which I do, which is why I'm not invested in like hundreds of different things, because I don't want to spend my entire life glued to a screen watching the market, the news, and the trends. I have a small number of things. Like right now, it's only about a dozen total crypto investments, and I'm probably going to limit it to around 20 to 30 because I want to be able to log in, and within a couple of hours, I want to be able to read everything there is to read about everything that I'm invested in and make smart decisions based on what's going on and based on my personal feeling of what's going on in the market and in those individual companies and the market as a whole. So also what I do is I take 80% of my entire portfolio and I make sure that it's in the top 5 coins, right? So the top 5 cryptos, I want to make sure that I'm putting money into things that have been proven, right? Because there's lots of coins out there that have not been proven. They're still very shaky. Their teams are still trying to work out a lot of the kinks in their system, and even within their team. And you never know what's going to happen with those things. So there's certain things where I might only put $20 or $30 in, and I say, okay, let me hold that for 6 months, hold it for a year, and just see what happens with it. If it goes away, it's only 20 or 30 bucks. No big deal, right? Whereas something like Bitcoin, I wouldn't mind dropping thousands of dollars into that thing, and there's people that literally put just millions of dollars into Bitcoin if they have the money available to do so, because there's so much reliability in Bitcoin. There's so much value in Bitcoin, and there's so much of the market that backs Bitcoin as a legitimate cryptocurrency, and also as a store of value, right? So I put 80% into the top 5 coins, and then 20% into the altcoins and the ERC20 tokens, because I don't just want to be in the top 5 coins that happen to be, the most expensive and most secure coins to have in my portfolio. I also want to have some of the risky ones that also show a lot of promise, right? If they show a lot of promise, if they make sense, if they have a strong team, if they have a solid white paper, if it feels like they're going to provide tons of value out there in the marketplace, and as a result, the value of that coin is going to increase, or that token, when it releases as a coin on its own blockchain, will be a lot more valuable than it is now, then I'm going to have that in my portfolio, but I'm still going to keep it within that 20% range, where, like, when I have 80% of my overall investments in those coins, I'm not talking about number of coins, I'm talking about overall value, right? So if you were talking about $100,000, it would be 80,000 would be in the top 5, and then 20,000 would be spread out among whatever altcoins or ERC20 tokens that you're invested in. The next thing is, again, I stress over and over again that I hold long term, right? I'm not looking to do the short-term buying and selling and day trading type of a thing. Maybe you do, and if you do, then you want to really study that. But for me personally, I'd rather just stick with the investing part of it and only trade one coin or token for another, simply for holding purposes. And the only time I'm going to sell is if it reaches a new all-time high and the market looks like it's going to be reversing into a bear market from a bull market. So if the bull run is over and it's reached a new all-time high and it's going into a bear market, then I might sell some of these things. But here's the thing, just because it goes from a bull run to a bear market doesn't mean that I'm going to necessarily sell, because it might go on a bull run and some of my coins might not reach a new all-time high. And if they don't reach a new all-time high during that run, I'm still going to keep holding. And as it drops down, I don't care. I'm still going to keep holding because I know it's going to come back up again eventually, right? And that's just the way the market works. It's always going to go up and it's always going to go down, and you just got to be willing to hold on during those tough times, because the people that hold on during those times when everybody else panics, if you hold on during that time, you're going to win. Because the people that panic and sell, and then they see that it stabilizes because it's a retail market, and it ends up stabilizing later like it always does, right? Because people need retail stuff. And the thing is people need, they don't think they do, but they do. They need this cryptocurrency. They need this technology. Why? Well, because the banking system has been failing them for years, and it's rapidly declining, right? So you have these, I won't go too far into this, but basically, essentially, Bitcoin has created the ability for the average person to have the power of a bank in the palm of their hand, right? And not have to rely on a government or a banking system in order to build and hold wealth, right? So I like holding long term, and I like to keep the majority of my holdings in a hardware wallet. And that's what I mean by having the power of a bank in the palm of your hand. I want to have a hardware wallet like Trezor or Ledger or KeepKey or something like that. My two favorites are definitely Trezor and Ledger Nano. But those two are great because they're completely off of the internet, right? They're not a central point of attack like an exchange would be, right? If you put your cryptocurrency into an exchange, and if that cryptocurrency exchange were to get hacked, or if it shut down for whatever reason, all of your cryptocurrency in that account would be wiped out, be gone forever, right? You wouldn't be able to get it back. But if you have just enough to do some exchanges that you want to do, right? And then everything else you take off of the exchange and put in your hardware wallet, you control those private keys on that hardware wallet. They never get shown to your computer system when you plug it into your USB port. They never get put on the internet. No one ever sees them or controls them but you, right? So you have control of it, and you get to do whatever you want with it, right? So ultimately, this is what I do, right? And these are the basics for me. Fiat to crypto, crypto to crypto, crypto to tokens, an 80-20 split between the top 5 and the altcoins and tokens. I hold long term, only sell if there's a new time high, and it needs to be an all-time high for that particular coin, or I'm going to keep holding. And there also has to be a sign that it's going to start to move toward a bear market, and it's going to start to decline in price. But if not, I'm holding. And if those two things don't happen simultaneously, then I'm holding. If they both happen, then I'll sell. But then when it drops down to a new rock bottom price, I'm buying right back in. Why? Because I'll end up with a massive profit if I do that. And obviously, keep it on a hardware wallet. You want to keep that stuff, as much of your crypto, off of the internet as possible, so it is as secure as it can possibly be. So that's everything that I wanted to share in this video. If you guys liked it, obviously thumbs up, comment below, and feel free to share it. Share it on your blog, share it on social media, and if you like the content that I'm putting out there, make sure that you subscribe to my channel. And after you do, there's this little bell symbol that pops up. You can click on that, and you can get a notification to your email. And even on your phone, if you have the YouTube app on your phone, you'll be notified every single time that I put out a new video on this channel. So thanks for watching. I'll see you again soon.